We always talk about how crucial water is, but it's kind of wild how often it flies under the radar in the industrial world. Like it's just kind of there, right? But if you zoom out and think about it, water isn't just some sidekick. It's actually central to making the whole industrial engine run.
Oh, absolutely. I mean, when we think about what drives industry, we tend to jump to things like raw materials, energy, that sort of thing. But water, it's like this fundamental ingredient in so many essential processes, even though we don't always see it directly.
Right. So for this deep dive, we're going to get into water technology. We'll explore why it's becoming so vital for industries, as they face these mounting challenges with water, both how much there is and, the quality of the water they can get. And we're basing this whole discussion on a really interesting report that breaks down where the investments are going in the water tech space.
Exactly. What we want to do here is really unpack the main trends, the potential roadblocks, and also those exciting opportunities popping up in water tech, especially because industry's got to figure out how to operate in a future where water is basically a really precious resource, carefully managed down to the drop. And for you listening, our goal is to cut through all the jargon and give you a crystal clear view of what's happening.
And it's pretty mind-blowing when you look at the sheer scale of this thing we call the water crisis.
Yeah.
Like right now, half of everyone on the planet experiences serious water shortages at some point during the year. And get this, a full quarter of the globe is dealing with high water stress, meaning they're using up over 80% of the renewable fresh water.
And the trend, that's what's really alarming. In the last 40 years, global demand for fresh water has shot up by something like 40%. And if we zoom out even further, back between 1970 and 2019, the amount of renewable fresh water each person has access to globally, that dropped by over half.
And it's not slowing down. Freshwater use keeps going up about 1% every year. And this is driven by economic development, sure, but also by how we're changing our consumption habits. Agriculture, that's still the big water hog, using up something like 70% of all the fresh water globally. But the real drivers pushing that demand higher, it's industry and homes.
Yeah, you're spot on. As more and more economies get industrialized and cities grow, the need for water in factories and homes just skyrockets. But it's not just about having enough water to go around. The infrastructure, all the pipes and treatment plants that deliver and manage that water, that's under immense stress too.
Oh, talk about infrastructure.
Yeah.
It's estimated that globally about 30% of treated water is just vanishing. It's leaking out of these old crumbling pipes. And in some places, it's even worse. Losses can be as high as 70%. Then you've got farmers who depend on rain, struggling to get steady irrigation when they need it most.
And the quality of our water, that's becoming a bigger and bigger issue. Now, in wealthier countries, a lot of the pollution comes from agricultural runoff. But in less developed countries, a huge problem is often just not having enough wastewater treatment.
Right. And on top of that, we've got these new kinds of contaminants, things like PFAS, pharmaceuticals, even tiny nanomaterials. Our current water treatment systems, they're often not equipped to get rid of those effectively. It's a real multi-headed monster of a problem.
It really is. And if we zero in on the industrial sector, water isn't just some nice to have, it's the backbone of their operations. Think about it, diluting stuff, making steam to generate power, cleaning everything, keeping things cool. Water is part of almost every core industrial process.
And it's not just what goes on inside the factory either. Corporate supply chains, those are apparently guzzling a whopping 2/3 of all the water we use. And get this, just 7 major sectors: food, textiles, energy, manufacturing in general, chemicals, pharmaceuticals, and mining, those guys combined are responsible for 70% of both freshwater use and pollution.
It's fascinating how much the amount of water varies between industries, plus the type of water they need. I mean, a textile factory needs totally different water than a semiconductor plant.
For sure. And we're always talking about having enough water, like quantity. But this report we're looking at, it hammers home that water quality. That's equally critical because it directly impacts how good their products are, how efficient their operations are, even how long their equipment lasts.
Couldn't agree more. I mean, if you have impurities in the water, it can contaminate a whole batch of products, gunk up machinery, cause corrosion, lead to these expensive shutdowns. So it's not just an environmental headache, it hits companies right in the wallet.
And speaking of finances, the report highlights the potential financial risks from water scarcity. Like, it's eye-opening. Barclays did some research suggesting that the consumer staples sector, so think agriculture, food, beverages, they could be looking at a $200 billion hit from water shortages. That's 3 times bigger than they might lose from carbon risks.
Yeah. And CDP, they focus on environmental disclosures. Their report from 2020 estimated potential losses could be even bigger, up to $300 billion every year if companies don't tackle these water risks head on. These aren't just numbers on a page, they represent real money companies could lose.
Absolutely. And to drive home how crucial water is, let's take a closer look at a few specific industries. Let's start with semiconductors. They're the biggest users of something called ultrapure water UPW. It's essential for making those tiny, super intricate circuits in our electronics.
And it's amazing how crucial that purity is. Cleaning the silicon wafers, those are the base for microchips, that takes up more than 30% of the whole chip making process. And this UPW, it has to be able to remove even the tiniest particles and the slightest traces of chemicals. If it's not pure enough, it can completely ruin the delicate structures they're building at the nanoscale.
And the amount of UPW they use, it's crazy. A single 30-centimeter silicon wafer can use up to 2,200 gallons of this super purified water during the cleaning steps. And as they make chips smaller and smaller, they need even purer UPW with stricter and stricter standards, so the demand keeps going up.
And then there's power generation. They use a ton of UPW too, particularly in thermal and nuclear plants, for their boilers and turbines. That ultra-pure water, it stops scale from building up and prevents corrosion, which could really damage the equipment. Those repairs are expensive, and no one wants a power outage.
Right, so it's all about keeping the power grid humming along and keeping costs down. Plus, UPW helps them recover steam condensate, which they treat and reuse inside the plant.
And we can't forget about the chemical and pharmaceutical industries. UPW is super important there too. It makes sure their chemical reactions happen correctly, prevents unwanted byproducts that could pollute the environment, and guarantees the quality and safety of their products, especially medicines. In these heavily regulated industries, even tiny impurities can have huge consequences.
Okay, let's break down this term. Ultra-pure water. It's not like running your tap water through a Brita filter. This stuff, it's been purified to the max, with almost nothing left in it but the water molecules themselves, just hydrogen and oxygen ions.
The level of purity is mind-boggling. The strictest standards, they require the impurities to be less than 1 part per trillion. To put that in perspective, that's like having a couple of milligrams of contaminants in an Olympic-sized swimming pool. Basically nothing.
Exactly. And if companies, especially those using a lot of water, if they don't manage it well, both how much they use and keeping it clean, they face some serious risks. They could see their daily operations disrupted, their supply chains getting choked up, and ultimately it could hurt their ability to grow and innovate.
And this isn't theoretical anymore. That Bloomberg report we mentioned, it found that between 2019 and last year, way more companies started listing water scarcity and drought as major risks in their annual reports. It's definitely climbing the corporate ladder of concerns.
It's surprising, though, when you look at shareholder proposals about environmental stuff, the ones about water risks are still pretty rare compared to things like climate change. The report thinks this might be because water scarcity tends to be a local problem. It hits different regions hard, but it's not this big global thing like carbon emissions.
Makes sense. Climate change, it's this global threat looming over everything. But water scarcity, it often hits hard in specific places, so it doesn't always have that same sense of urgency for investors globally. But look, the economic fallout from water shortages, that's becoming impossible to ignore.
No doubt. Research shows that smaller companies, they can see real drops in sales and employment when there are disruptions in city water services. And droughts, those can cost businesses 2 to 4 times more in lost revenue than floods.
And it doesn't have to be some mega drought either. The analysis found that with each additional month of water shortages, businesses see a measurable financial hit. CDP, they estimate that over $15 billion in corporate assets are basically stranded, unusable, or seriously devalued because companies can't get the water they need.
And the report has some real-world examples, some pretty dramatic ones, like Antofagasta, a big mining company in Chile. They had to shell out a massive $1.5 billion to basically double their ability to use seawater. Freshwater is getting so scarce in the region.
Then there's ADM, the agricultural giant. They could be looking at disruptions and losses of up to $640 million because of problems with the Mississippi River. It's a key route for them, and it's having issues. They're also projecting another $70 million in losses because of drought upstream in their supply chain.
And then several chemical companies, Schumers, Cabot, or Beeper Advance, they all had to declare force majeure in Mexico. For those listening, force majeure basically means unexpected circumstances in this case, a bad drought, and the government restricting water use forced these companies to temporarily shut down their plants.
Dow, another chemical bigwig, they figure water risks could cost them anywhere from $315 million to a massive $1.8 billion. Their biggest integrated chemical site in the U.S., it's particularly vulnerable to growing water stress.
And let's not forget those huge legal settlements, more than $11 billion total, that companies like 3M, DuPont, and Chemours have had to pay because of PFAS contamination in drinking water.
Even TSMC, the world's top chipmaker, back in 2020, they had to truck in water during a drought in Taiwan. Added a lot to their operating costs.
And down in the U.S. Southwest, there's been such a bad drought that more than half of the cotton crops had to be abandoned 2 years in a row. That's a huge blow to the agricultural economy there.
Constellation Brands, they make Corona beer, among others. They actually had to ditch a nearly finished brewery in Mexico. Just not enough water. That was a $660 million write-down. Now they're building a new one further south, which is costing them another $1.3 billion and making their logistics more expensive in the long run.
And BASF, a massive chemical company, back in 2018, they had to spend an extra $250 million because the Rhine River in Europe was at a record low level. It messed up their shipping routes. These are all real-world examples, and they show how water scarcity is a real financial risk. It's hitting bottom lines across all sorts of industries. I mean, we're talking millions, even billions of dollars, so it's not just some side issue anymore.
Definitely not. These examples really show why it makes good business sense to invest in water tech, to make industrial operations more reliable and resilient, so they can weather these water challenges.
Okay, so investing in better water management, that's clearly urgent. But the report points out that putting money directly into those traditional water utilities, that can be tricky. It's a sensitive area politically. Governments and communities, they're not always keen on large-scale private involvement or big price hikes for something as basic as water.
You're right. Investing in water utilities has always been tough. And this need for huge infrastructure upgrades, that's making it even harder. The amount of investment needed globally, it's almost mind-boggling. The UN estimates we need to be pouring in between $0.9 and $1.5 trillion every year between now and 2030 just to meet global water and sanitation needs.
That's like 20% of all the infrastructure investment the world needs. And yet, the water sector, it's chronically underfunded compared to things like energy and agriculture. Historically, water infrastructure has relied on public funding and what users pay, but that's just not cutting it anymore.
And the water utility industry, it's so fragmented, especially in some areas. Take the U.S., for example. Over 140,000 public water systems, and a crazy 97% of them serve less than 10,000 people each. These smaller utilities, they often lack the money and know how to invest in big upgrades or new technologies.
And it's not just the small guys either. Even big, well-established utilities are struggling. Thames Water in the UK, they serve a huge population around London. They've needed billions in emergency funding and are talking about raising prices significantly just to deal with their aging infrastructure. Apparently, billions of pounds worth of their assets are in rough shape and could even be a safety risk.
The economics of water investment, it's complicated. In a lot of places, water is priced too low. Good for consumers in the short term, but it doesn't give utilities enough money to reinvest in maintaining and upgrading their systems. And the benefits of good water infrastructure, things like better public health and a stronger economy, those are hard to put a price tag on, so it's tough to attract private investment.
And that brings us to the whole debate about private financing and public-private partnerships in the water sector. Some argue that bringing in private companies can make things more efficient and improve service. But others are worried about costs going up and whether everyone will still have access to affordable water.
Yeah. So the report concludes that while investing in water utilities is essential, it's really hard to come up with a clear and compelling investment plan. There are just so many hurdles: the amount of money needed, the fragmented industry, water being priced too low, and all the political hot potatoes around privatization.
So directly funding the infrastructure, that might be a long shot. But the good news is the report highlights some promising areas within water technology itself. They point to digital water products, advanced treatment and recycling tech, and desalination as areas with big potential. They also mention precision irrigation, but we're not going to dive into that today.
Exactly. This is where the real innovation is happening, and crucially, this is where investors might see good returns. These technologies directly address the water challenges that industries are up against. So while the infrastructure might be a tough investment, the tools to manage water better, that's where things get interesting.
Okay, so let's start with digital water products. What are we talking about here exactly?
Imagine using all sorts of high-tech sensors, AI algorithms, even data from satellites to get a detailed real-time picture of water operations. These digital tools, they can help companies use water more efficiently in their processes, make their equipment last longer, and give them way more insight into the quality of their water, both what they're taking in and what they're discharging. It's all part of that big trend of digitalizing everything in industry, Industry 4.0.
So it's all about harnessing data to make smarter decisions about water. I like that. The report even quotes Xylem, a big water tech company. They say that if companies don't optimize their water management, they could be losing millions through inefficiencies, higher energy costs, and even financial losses from unexpected shutdowns.
That's right. And smart metering, that's a key part of this. We've gone from reading meters by hand to automated systems, and now to even smarter systems called AMI. So while AMR just gathers data, AMI takes it further. Two-way communication, deeper analysis, real-time insights. For industrial users, this means they can see exactly how much water they're using, which encourages them to conserve. They can also spot leaks and inefficiencies way sooner, saving water and money.
Now, the report says that advanced water treatment and recycling, that could be the best investment opportunity in water tech. Why is that?
Because it hits both sides of the water problem, how much we have and how clean it is. With advanced treatment, companies can clean their wastewater better to get rid of pollutants. But the cool part is they can then recycle and reuse that water, which slashes how much fresh water they need.
It makes total sense.
Yeah.
If they treat and reuse water, they're less dependent on outside sources, which is huge in water-stressed areas. But the report also says that different industries need different levels of water purity. So one tech solution won't work for everyone.
Yeah, for sure. The contaminants in industrial wastewater, they vary a lot. You might have biological stuff, heavy metals, all sorts of complex chemicals. So researchers are focusing on removing these new contaminants like PFAS, making the treatment processes themselves more eco-friendly, using less energy, fewer chemicals, and of course, trying to bring the cost down.
The report talks about a cool example in Indonesia. A city water treatment plant upgraded its system with nanofiltration tech. They cut their chemical use by a whopping 85% and lowered their operating costs and energy use. The company, NX Filtration, says their system is very cost-effective and the water quality is way better.
Totally. And think about water-intensive industries. Water recycling is a game changer for them. TSMC, they managed to recycle 86% of their processed water in 2022. This not only helps them if there's a drought, it also saves them money because they don't have to buy and treat as much fresh water. Down in Spain, they're recycling wastewater from the city for cooling at their petrochemical plant.
And the report brings up a really important point that often gets overlooked. When there are water problems, it can cause tension between industrial facilities and the local communities that need that same water. So by being smarter about water management, including treatment and recycling companies, can actually build better relationships with their neighbors and avoid potential social and regulatory headaches.
Absolutely. Okay, let's move on to desalination. It's been around for a while, but it's evolving and becoming more feasible, right?
Right. Especially reverse osmosis desalination. It's becoming more energy efficient and environmentally friendly. And the cost of desalinated water has plummeted in the last decade. Seawater reverse osmosis, it can be as low as 50 cents per cubic meter now, and they're working on getting it even cheaper, maybe down to 30 cents.
So it's becoming more competitive and attractive, especially for water-scarce coastal regions. If they can power the plants with renewables, even better. It's a reliable source of high-quality water that doesn't depend on rainfall.
The report mentions London mining in Chile. They're using desalination for their copper mines. That area is getting drier and drier, so desalination is vital for them to keep their operations going.
Exactly. And Chile's seeing this broader trend of using more seawater in industry, partly because of stricter environmental rules and worries about freshwater availability.
Okay, so we've talked about the challenges, the tech solutions, but what about the bigger economic picture? What's the impact of investing in all this water tech?
The report highlights some really compelling numbers that show just how much water matters to the economy. In a lot of developing countries, a huge chunk of jobs, between 70% and 80%, rely on water, mostly in agriculture and water-intensive industries. Even in developed countries, it's still around 50%. So access to water and managing it well, it's not just an environmental thing, it's the foundation of the global economy.
And these water technologies, they can boost the economy in lots of ways. Take digital water solutions, they can cut costs through better efficiency and lower energy use. The report cites Xylem again, saying that by simply optimizing water management, companies can save millions.
And overall, investing in water, sanitation, and hygiene, that has a huge return. There are knock-on benefits for public health and education. For industries, adopting water-efficient tech saves them money on water and energy, plus it reduces their environmental impact, which is good for their image and helps them avoid regulatory problems.
There's this company, Drups. They've developed a system to capture heat and water vapor from industrial processes. They say it can cut a facility's energy use by 10% to 30%, which means big cost savings and a smaller environmental footprint.
And then there's a resilience factor. We talked about TSMC investing in recycling to protect themselves from droughts. Dubai is another good example. They're using smart water management systems to find and fix leaks faster, which conserves water and reduces losses. As we see more and more climate-related shocks, these technologies become even more valuable.
So it's kind of surprising that despite all the reasons to invest in water, the water tech sector has always been underfunded. The UN says we need to be investing trillions more every year just to meet basic global water needs, and if we don't address these challenges, the economic cost down the line will be way higher.
Yeah. The problem is, water has often been undervalued economically, so it's hard to justify big investments based just on direct cost savings. Plus, the water utility sector is so fragmented that a lot of smaller players can't get the capital they need for upgrades. But the good news is that these growing concerns about water scarcity and water quality are finally pushing people to look for innovative water tech solutions.
So what should companies be doing? How should they be thinking about water tech strategically?
The report argues that companies need to shift their thinking. Water tech can't be some afterthought. It has to be central to their strategy. They need to really grasp the economic value of water and all the risks they face if they don't have enough clean water. Ignoring this stuff can disrupt their operations, hurt their brand, bring regulatory trouble, and even cause conflicts with local communities.
It sounds like there's a huge opportunity to merge these water tech advances with the whole smart manufacturing industry 4.0 movement. The report talks about using digital twins, which are virtual models, to simulate and test water infrastructure. That way, companies can proactively identify and address potential risks.
Exactly. And by better integrating water monitoring with other operational systems, companies get a more holistic view of their processes. That can unlock more efficiencies and optimization opportunities. Policy and regulations, those are also key drivers. The EU's water reuse regulation, for example, sets standards for reusing treated wastewater. That kind of regulation creates a strong market demand for innovative solutions.
So the bottom line is, as water gets scarcer and dirtier, investing in and using more water technology is not just the right thing to do, it's becoming absolutely essential for industries. It's how they'll keep operating, stay sustainable, and contribute to a healthy economy. The report even mentions a Barclays analysis from last year. It says that the financial payoff for taking action on water risks, that's getting bigger, faster.
Totally agree. Now, the report dives into the investment landscape and highlights 3 Japanese water tech companies that are worth watching. They point out that Japan's water treatment industry is growing steadily, especially in key areas like semiconductors, pharmaceuticals, and even nuclear power.
And with the huge global expansion in semiconductor manufacturing, especially with initiatives like the CHIPS Act here in the US, there's a big opportunity for companies specializing in ultra-pure water tech.
Right. It's still a niche market, but the global UPW market was valued at around $8.8 billion in 2023. Forecasts predict it could reach over $25 billion by 2033. Even the more conservative estimates still point to significant growth.
And it seems like Japanese companies are the leaders in this specialized field. They have a big chunk of the market in all the major semiconductor hubs globally, and they're expanding in the US too. The report suggests that Western companies are having a tough time competing because of the high initial investment, semiconductor manufacturers not wanting to switch suppliers for such a critical input, and the specialized expertise needed to build and maintain these complex UPW systems. The exception they note is Intel's partnership with Veolia.
It's remarkable how well these 3 Japanese firms are doing financially. On average, their operating profits have grown by a whopping 365% over the past 5 years. Compare that to the broader Japanese industrial equipment sector, which only saw a 19% growth in the same period. It shows how strategically important and profitable these specialized technologies are.
Let's take a closer look at these 3 companies. First up, we have Kurita Water Industries.
Kurita is the oldest and biggest of the 3, founded back in 1949. They've become a one-stop shop for water treatment solutions. They do everything from specialized chemicals to designing, building, and maintaining treatment facilities, plus a bunch of related services. They have the widest range of offerings and are probably the most similar in scope to big Western companies like Xylem and Veolia.
So they do a bit of everything, but a large chunk of their sales, 43% in their last fiscal year, came from the electronics industry. The other 57% is from their general industrial and municipal water treatment business.
Their whole business model is about providing end-to-end solutions. So they don't just sell chemicals, they also handle the engineering, construction, and maintenance of water treatment plants. Plus, they offer specialized cleaning services for semiconductor manufacturers, they supply UPW on contract, and even do soil remediation. It's a very diversified approach, but the report does wonder if this wide range might prevent them from becoming super specialized in any one high-growth area.
Their current plan, PSV27, aims for decent sales growth and a 16% operating profit margin by 2028. Compared to the other two companies, they have the highest proportion of service-based sales. This gives them steady revenue, but might also slow down their overall growth compared to more specialized players. And because they offer a lot of different products, including basic chemicals, they have a large global workforce.
It's interesting, Kurita has the highest gross profit margins out of the three, but their operating and net profit margins are actually lower than their more specialized peers. Same with their return on equity and return on invested capital, those are lower too. And even though their profitability and growth are a bit lower, their stock is currently trading at a slight premium in terms of price to earnings and enterprise value to EBITDA ratios.
Yeah. Next, we have Organo Corporation.
Organo has taken a very different route. They're much more focused, specializing in high-value purification tech, especially for electronics and semiconductors, but also pharmaceuticals and even nuclear power. They're smaller than Kurita overall, but they have deep expertise in UPW. The report even suggests they might have a near monopoly in supplying water treatment tech to nuclear plants in Japan.
And their financials look consistently strong. This seems to be driven by their focus on high-margin services and their dominance in the semiconductor water treatment market. Their revenue has been growing impressively in recent years, with double-digit increases for the past 3 years straight.
And it looks like that growth is going to continue. They're projecting strong double-digit revenue growth again this year. Another thing that stands out is their steady improvement in profitability. Both their EBIT and EBIT margins have been going up.
Their balance sheet is rock solid, too. They've been net cash positive since 2020 and have consistently positive free cash flow. This strong financial position allows them to aim for a dividend payout ratio of 30% or more, which is good for shareholders. The return on equity has also been climbing.
In terms of valuation, the report says Organo stock is fairly priced right now, not overvalued or undervalued. The main investment argument for Organo is that they can maintain and even grow their competitive advantages, especially their very strong, long-standing relationship with TSMC. Organo supplies essential equipment and services to about 80% of TSMC's fabrication plants, including all their cutting-edge facilities producing sub-10 nanometer chips.
Their long-term revenue and earnings growth, it's impressive, and they've achieved this mostly with their own cash flow, without relying much on debt. Their management team has consistently beaten their own financial targets, too. Looking ahead, they're sticking to their focus on electronics and pharmaceuticals, growing their own UPW facilities, and increasing revenue from services and maintenance contracts.
What's really interesting about Organo is how they've shifted from a business model that was heavily reliant on these big cyclical plant construction projects to one with more stable, recurring revenue from their water solutions service business. This service segment now accounts for almost half of their electronic sales. And even though their margins and return on invested capital are better than Kurita's, Organo's stock is trading at reasonable multiples. They're even cheaper than some pure-play global water companies like Xylem and Ecolab, so there might be some upside potential there. They also have a solid service sales ratio in the 40–50% range, plus they're expanding in North America and holding on to their position in the Japanese nuclear power industry.
And finally, we have Nomura Micro Science.
Nomura is a more niche player. They mainly focus on providing UPW systems for semiconductor manufacturers. Because they're so specialized, their financials are closely tied to the ups and downs of the semiconductor industry.
So, when the semiconductor market is booming and companies are investing heavily, Nomura can see huge growth and high profits. But when the market slows down, they're hit harder. Their lack of diversification is both a strength and a weakness. It lets them focus on a high-growth area, but it also makes them vulnerable to downturns. They also have the lowest service sales ratio of the three, around 20%. This means their revenue can spike when the market is good because of big equipment sales, but it also means their revenue is more volatile when the market is down. And a large chunk of their sales, around 54%, come from just one customer, Samsung.
So if we compare their business models, Kurita's diversification gives them stable revenue across different industries, but it might limit their growth and profit margins in the booming semiconductor sector. Organo seems to have found a good balance. They focus on high-value areas like semiconductors and pharmaceuticals while building up their service revenue, which is more stable. Nomura's laser focus on semiconductor UPW can bring in huge returns when the market is good, but it also comes with the risks of cyclicality and customer concentration.
Looking at profitability and efficiency, Organo seems to be the top performer. Their profit margins are consistently improving, and their return on equity and invested capital are strong. Nomura also has high returns, but those are likely to be more up and down because of their market focus.
And at the time of the report, it seemed like the market wasn't fully pricing in these differences. Organo, even though they're more profitable and have better growth prospects than Kurita, was trading at a lower price-to-earnings ratio. Nomura looks cheap on some metrics, but their earnings are the most volatile because of their sector focus.
In terms of future plans, Kurita is focusing on diversifying further and going digital with their services. Organo wants to maintain their tech lead and expand in their core high-growth areas. And Nomura is sticking to what they know best, becoming even more specialized in semiconductor water treatment.
So taking all this into account, the Japanese UPW sector has some really interesting investment opportunities, especially for those looking to ride the wave of semiconductor growth, the rising demand for advanced water solutions.
And the report's pick. They say Organo is particularly well-positioned because of their focused model, strong financials, and balanced approach. They've got that deep specialization, but also a growing base of recurring service revenue.
They point out that while Kurita offers stability with its size and diversification, Organo's focus seems like a more direct path to higher growth and profitability. Nomura could bring in big returns when the semiconductor market is hot, but it's a riskier, more volatile bet. Ultimately, investors need to carefully consider these different business models, financials, and strategies when looking at investments in this specialized sector.
And their final verdict. Based on their analysis, Organo looks like the most attractive short-term investment opportunity among these three Japanese UPW companies.
So as we wrap up this deep dive, it's crystal clear that water technology is a vital and rapidly growing field. It's especially important for industries facing increasing pressure on water resources. And this dynamic landscape is ripe with opportunities for innovation, growth, and strategic investment.
And as we saw with the Japanese UPW market, there are different ways to approach this sector, each with its own risks and rewards. Kurita, Organo, Nomura, they each represent a different path.
This whole discussion really gets you thinking about how technology is merging with essential resources like water. And this is going to change everything, how industries operate, our daily lives, even the global political landscape. It makes you wonder, what other seemingly under-the-radar technologies might be on the verge of becoming just as crucial as resource pressures keep growing in the coming years? That's something worth pondering.